Hello, good evening everyone. This is JC De Guzman, and this is our top 5 gainers and top 5 losers analysis for June 10, 2019 in preparation for the next trading day this Tuesday. And tonight I'll be talking about PHEN, ISM, GSMI, HLCM, RRHI, Cebu Pacific, all ALLHC, Green, MWIDE, and IRC. I'd like to remind everyone that this discussion is for short-term trading purposes, not for long-term investing. Okay, take note of that. Beginning with PHEN, this stock closed today at 2.62. Support remains at 2.16, while resistance is aligned to the 61.8% of the up Fibonacci extension, which is at 3.35. In my previous videos, I also talked about PHEN, and like what I have mentioned in those videos, just ride on to the momentum of this stock. Make sure that you are applying a trailing stop loss so that you are not worried on what you should do as soon as the price or as soon as the stock registers a red candlestick. And aside from that, the trailing stop loss will protect you from from carrying some unbearable losses. Based on my readings on today's price action and the overall chart of PHEN, I remain bullish on this stock. I don't see any formation of a bearish convergence with the signal line between MACD and the signal line. The upward momentum remains strong, even though RSI is already swimming inside the classical overbought level. Um, the today's volume and the increasing uh, increasing upward momentum signify or support the idea that RSI's score is not a signal to sell. You can hold your position or you can top up within the dominant range that I will show you in a few moments from now, or you can still enter a new position provided you are happy with the reward to risk ratio that you will get. Okay, now let me show you the dominant range for PHEN. It's between 2.6 to 2.65. Okay, 2.6 to 2.65. It's in favor of the buyers. So you have a data-driven reason to hold or to top up if you already have this stock in your portfolio. And if you don't have it, calculate your reward to risk ratio first. If you're happy with that, you can go ahead and do a test buy between 2.6 to 2.65. Okay, next we have ISM. This stock closed today at 6.29. Support is at 4.46. Let me delete this line here. And resistance is at 7.36. The last price was at 6.29 and it managed to break above its 10-day simple moving average. MACD is already poised to cross above the signal line. Okay, I'm seeing a change in direction of the MACD line already. Meanwhile, on the DMI histogram, the upward momentum is already in a strong category. And I am also seeing a perfect bullish alignment among the three simple moving averages of ISM. So all these things that I've mentioned support the likelihood of seeing a continuity or a sustainable a sustainable ascent in price of ISM as far as the data that we have seen today. Okay, let me show you ISM's trade and volume distribution chart. The dominant range is between 6.2 to 6.31. If you would like to be very strict, 6.2 to 6.3, if you would like to be very strict on this one, you can say it's between 6.25 to 6.3 only. Anyhow, that's still in favor of the buyers. So if you have ISM, you also have a data-driven reason to add more shares. And if you don't have ISM, if you are happy with the reward to risk ratio, considering that support is at 4.46 and resistance is at 7.36, you can do a test buy either between 6.2 to 6.3 or 6.25 to 6.3. Okay, I am bullish on ISM. Next, GSMI. This stock closed today at 46.35. It broke above its previous resistance at 44.46. So the ongoing or the current psychological resistance is at the 61.8% of the up Fibonacci extension, which is at 54.5. It closed above its VWAP of 42.17 today, 45.17 rather. I am also seeing a perfect bullish alignment among its three simple moving averages. It also broke above its 10-day simple moving average plus MACD is already showing us, it shows us a formation of a bullish convergence with the signal line. So if this ascent will continue, it will be more likely for MACD to cross above the signal line, probably once the price breaks above 47 to 48. Okay, but apparently based on the DMI histogram, given the previous bullishness of the stock in the previous weeks, uh, I can verify that the upward momentum remains strong. Okay, take note of that. Now RSI, even though it's already in and out of the classical overbought level, I don't think this is a sign to sell abruptly. Okay, this is not a sign to sell abruptly on GSMI. Our signals here are still bullish on GSMI. We have nothing to worry about it if we have a trailing stop loss. If you do have a trailing stop loss, that's the question really. When all signals are bullish and you have the stock and you don't know what to do next, there's one thing for sure. You don't use a trailing stop loss. So I suggest you use a trailing stop loss. When you already have paper gains on a particular stock, you don't have to see yourself in a stressful scenario or environment. You can avoid that if you are using a trailing stop loss. Okay, let me show you the trade and volume distribution chart. So 46.35, the closing price is somewhere in the middle, and the dominant range is between 45 to 46.35. This zone, 45 to 46.35, it's in favor of the buyers. So there you go. You still have a data-driven reason either to hold or to add more shares if you already have GSMI in your portfolio. And I think you still have it if you are strictly observing or if you are uh, loyal to our process of doing a test buy whenever the conditions of the 10 SMA and MACD combination are met. And that happened last May 6 or May 7. May 6. Okay? So if you caught that, congratulations. You should have already you should be already be making some fortune on GSMI. So all signals are still bullish on GSMI, and if you are planning to enter a new position, as always, calculate your reward to risk ratio first. And since the last price is closer to the acting support, of course you will have a thicker potential reward than the potential risk. Of course, it goes without saying that the reward to risk ratio is favorable for you then, so you can do a test buy. Make sure you calculate your trailing stop loss so that just in case the market acts as a contrarian, uh, should the market decide to contradict our data-driven bullishness on GSMI, at least you will not be risking more than what you can only handle. Okay? No matter how many data we will use for our sentiment, there will be times when the market will act as a contrarian. It doesn't care if I have 20 years of experience trading the market. It doesn't care that I'm using a lot of data in coming up with an assessment like this. So the market does not care on all of that. Okay. So next we have HLCM. Okay, HLCM closed today at 14 pesos per share. Support is at 13.5. Resistance is at 15.5. I am also seeing a perfect bullish alignment among its three SMAs. It also continues to move higher than its 10-day simple moving average. So that's a bullish signal already. And on the DMI, not the DMI but MACD, although MACD is still below the signal line, I'm already seeing a change in the slope's direction, in the direction of the slope of the HLCM. So let's see if this price will break above 14.5, it will be clearer. I think MACD will have a higher chance of registering a golden cross above the signal line then. The positive DMI is still above the negative DMI, and with the ADX score playing at 32 points, I would say that the ascent in price of HLCM is still more likely to continue. Okay. Okay, let me show you HLCM's trade and volume distribution chart. The dominant range is between 13.94 to 14 pesos per share in favor of the buyers. So again, those who already have a HLCM, you have a data-driven reason to top up. And if you don't have HLCM, calculate your reward to risk ratio first. That's the first thing that you will have to do. Don't get too excited just because I said that there are lots of bullish signals on HLCM right now. Don't get too excited. You have to calculate your reward to risk ratio first, because even though we got lots of bullish signals on HLCM, if your reward to risk ratio is not favorable for you, meaning to say if you have a bigger potential risk than the potential reward, then you will just be setting yourself up to a disadvantageous scenario. You don't want to see yourself in that kind of an environment. Okay, so as much as possible, you want to position yourself in in a setup whereby the potential reward dominates by a significant level the potential risk. Okay? All right. So we have to be very strict on that. Okay. Trust me, I learned it the hard way. Okay. RRHI. This stock closed today at 75.9. Support is at 68.6. Resistance is at 90 pesos per share. It managed to break above its 10-day simple moving average, but it has a lot of work to do for it to paint a perfect bullish alignment among its three simple moving averages. I think that will only become a reality once the price breaks above 81 to 82, or maybe around 85 pesos per share. Okay, but for now, let's take things one moving average at a time, so to say. Anyhow, the MACD remains above this signal line. That's a signal of a sign of a sustainable ascent in price. I'm also seeing a golden cross registered by the positive DMI above the negative DMI. So the RSI is also upward sloping already, and let's see. Foreign investors, on the other hand, they registered a net foreign selling worth 4 million pesos today. Nonetheless, volume remains bullish for me. RRHI closed above its VWAP of 74.78. So those are bullish signals already. Let me show you RRHI's dominant range. Mind you, the closing price today is closer to the intraday high than the intraday low. So this is the dominant range in as far as the closing price is concerned. It's between 75.35 to 75.9 or to 76. 75.35 to 76 pesos per share. That's the dominant range. Okay? It's in favor of the buyers. So if you have this index stock for short-term trading purposes, you still have some data-driven reasons to top up. And if you don't have it, given this resistance level and this support level here, you still have a better potential reward than your potential risk. So you can still do a test buy, okay, within that range. Next, we have Cebu Pacific. Let me remind you that 7 pesos worth of cash dividend. Uh, Cebu Pacific issued a 7 peso per share cash dividend, and the ex-dividend date is today. So that's what that drove Cebu Pacific's price to drop this much. It's not of any other reason, but it's just because of the uh, rebalancing. Okay, the market price must be rebalanced on the ex-dividend date, whether the dividend issued was a cash dividend or stock dividend or any other kind of dividend. So this is a normal thing. So without this, if not because of the cash dividend, well, I'm not saying that it's a bad thing. Okay, let me just make that clear. Without the cash dividend, we won't be seeing Cebu Pacific moving below its 10-day simple moving average. So what you're seeing right now is a normal reaction of the market of a stock, of a dividend issuing stock when it's ex-dividend date. Okay? So there you go. I hope that made sense to you. And by the way, foreign investors registered a net foreign buying worth 8 million pesos today. All right. So the upward momentum remains strong, by the way. The upward momentum remains strong. Support is at 80.8. Resistance is at, okay, let me plot a Fibonacci here so we can see the 61.8% extension. Where is it? It's at 101.5. Okay, this is our swing low and that's our swing high. And that's how I got the 101.5 as the psychological resistance, which is in confluence with the 61.8% of this up Fibonacci extension. Okay, of course, for now, we can consider this line here. We can consider 93 pesos per share as its historical resistance. But once it broke above 93, of course, you need to look for a psychological resistance. And where is it? It's at 101.5. Okay, let's see Cebu Pacific's trade and volume distribution chart. See, it's still in favor of the buyers because it's closer to the intraday high than the intraday low. It's between 88 to 89. So I remain bullish on Cebu Pacific. I'm not going to take this red candlestick against the bullishness of Cebu Pacific. This is a normal stock market price share price reaction of any dividend issuing company on its ex-dividend date. So I'm still bullish on Cebu Pacific. You can still top up, of course, provided the price is still moving above your trading stop loss. Okay, that should be automatic. I should not be even reminding you of that. Trailing stop loss, always, all the time. Okay, day in day out. Now, if you would like to enter a new position on Cebu Pacific, you can still do so, provided you are happy with your reward to risk ratio. Support is at 80.8, resistance, considering the historical resistance at 93. Check if you are happy with this reward to risk ratio. If you are, do a test buy within the dominant range that I've mentioned. Next, we have the previous POPI. Ayala Land Logistics. It closed today at 3.44, okay, and it's already moving below its 10-day simple moving average. It's also moving below it closed below its VWAP of 3.51. Volume is bearish for me. It's a confirmed bearish volume, and unfortunately, there's already a formation of death cross between MACD and the signal line. The positive DMI is also downward sloping. If this there's a likelihood of seeing this stock towards the support at 3.2, and your acting resistance is the historical resistance near 3.75. If it breaks below 3.2, welcome 2.8 as your next support level. Let's take a look at ALLHC's trade and volume distribution chart. The dominant range is between 3.44 to 3.48 in favor of the sellers. Okay, so don't buy this stock just yet. For those of you who don't have this in their portfolio, don't enter a new position yet. And if you have this stock, make sure that you lock in your profits once your trailing stop loss is hit. Okay. Some of you may have entered a new position on this stock last May 6. That was the day when the conditions of our 10 SMA and MACD combination were hit or satisfied. So congratulations. Make sure that you lock in your profits once your TSL trading stop loss is hit. Next, we have green, but it closed today in red. Green closed at 2.5, below its VWAP of 2.53. It's still moving below, above its 10-day simple moving average, but already below its 50-day simple moving average. So this is no longer a trending stock for me. As far as its position uh, below its 50 SMA is concerned, MACD is also still above the signal line. And it's not it does not it does not bend that much, forming a downward sloping line. So let's see in the coming day, let's see in the trade and volume distribution chart if we will get a strong bearish signal on that chart. Let's take a look at it. Oh yes, the dominant range is between 2.5 to 2.55 in favor of these sellers. Don't enter a new position yet. Okay, there's still a strong possibility for the price to test 2.25, so don't enter a new position. And just in case you already did last May 30 or May 31st, make sure that you execute your trailing stop loss once it gets hit. Okay, make sure that you do that. And if green is still moving above your TSL, please don't top up. Just hold it. Don't top up. Okay? Alright, I'm bearish on green. Alright, next we have MWIDE. MWIDE closed today at 19.28. It already broke below its previous resistance at 19.8. The previous support rather, and it's now acting as its current resistance. The present support is at 16.55. Take note that MWIDE is already moving below its 10 SMA and the 50 SMA, and MACD is still busy moving below the signal line. RSI, this is interesting because it just hit its classical oversold level. So let's see if there's a possibility for MWIDE to rebound from 19 pesos to 19.2. On the other hand, uh, the negative DMI is already still moving above the positive DMI, and it looks like the strength of the downward momentum is intensifying. Okay, but let's take a look at MWIDE trade and volume distribution chart. It's in favor of the sellers. It's between 19.28 to 19.5. So it's not yet clear. There's no clear indicator, or there's no clear sign of seeing a rebound from here. We have to be in a watch and see mode still. Okay, so if you don't have MWIDE, stay that way. Don't buy yet. Be in a watch and see mode. If we are seeing the presence of the 4 criteria that we are monitoring tomorrow within the first 15 minutes, do a fresh trade and volume distribution analysis on your own if you know how to, and then do a test buy if the 4 criteria are present. And if you don't know how to do your trade and volume distribution chart or analysis, you can post a request in our private clients forum. Okay, I'm not going to give any piece of advice for those who may still have MWIDE, because by now those who may have traded MWIDE before May should have already executed their trailing stop loss, and your trailing stop loss should have already been met by now. Okay, it's hard to believe if some of you who traded MWIDE before May still have a trailing stop loss that has not been met yet. That's hard to believe. Okay, last but not the least, IRC. It closed today at 1.92. Support is at 1.6. Resistance is at 2.19. This is the midterm support at 1.94. Okay, let's see. It looks like it's still moving above the 10 SMA, by the way, and it still looks bullish on the MACD histogram, and RSI is still quite distant from the classical overbought level. So let's see if that was just a short-term pullback. Let's take a look at IRC's trade and volume distribution chart. It's quite groggy as well. There's a lot of noise in the trade and volume distribution chart of IRC, but nonetheless, the dominant range is between 1.91 to 2 pesos per share. Okay, it's still in favor of the sellers, judging it by the sizes of these bars, which are in favor, which are closer to the intraday low. All right. Now, what's my advice? If you don't have IRC, don't buy it yet. If you have it and your trailing stop loss has not been hit yet, hold your position. Don't top up. Do not top up. Top up only if and when IRC registers a green candlestick and all four criteria becomes present again. Same thing for those who don't have IRC but are interested with the name. Consider doing a test buy once the four criteria become present. Because right now we don't have a problem with the 10 SMA and the MACD. The price is above the 10 SMA and MACD is above the signal line. We don't have a problem with that combo. What we are just particular right now is the presence of those four criteria. They are all absent. I don't know where did they go, but they are absent. Okay. So there you go. You've heard my technical analysis, overall sentiment, and trade setups for these 10 stocks today. If you have questions, please ask in the private clients forum. And I would encourage you to, if you have been a subscriber of Equilist Analytics for about 6 months at least, please sign up. I encourage you to sign up into our referral incentive program. If you can refer your friends or anyone and they subscribe, you get 20% of that. You get your 20% cut, and it will be uh, your incentive from doing so. Okay? So if you have questions about this referral incentive program, you can also send your questions via email. Okay? Again, my name is JC De Guzman, and have a great day.